Thanks to our friends at The Motley Fool, we get to make these videos because of our partnership. If you're looking for some great stock ideas, go to our link, fool.com/the smattering, and the Fool's going to give you their 10 best stocks to buy right now.
The growth has been outstanding. 51% last quarter. Gross margins were a little bit down. They're seeing a little bit of pricing pressure, commodities and things like that, a little bit harder to ship things around the world. So some of that stuff will ease over time, but the numbers have been just phenomenal. So did this continue, Jason?
Here's their slide with that info and a lot more. So revenue, $837 million. The solar segment continued to generate the majority of that, but strong $48 million in non-solar segment, right? And SolarEdge they're diversifying. They're getting into like EV powertrains, storage. They have their power backup for like industrial applications, things that they're doing. So they are diversifying that. But again, the solar based, all of those panel level electronics continue to drive the business. Gross margins look like they got held relatively steady on a GAAP basis, 26.5%, maybe down a touch.
Yeah, that's down from where they've been historically.
Oh, well down from that 32 to 39% we saw in last year and prior.
Yep.
But compared to last year, it's still down a little bit. Let's see what else here. Net income.
So just to put the top line numbers into perspective, revenue up 59% from a year ago overall, and then 65% in the solar segment. So that there's not a lot to complain about there. The thing that I think is interesting with these numbers, and as we see what's going on in the solar industry right now, is the tailwinds from the Inflation Reduction Act are not going to hit for a while, for at least a couple of quarters. So there's potentially a lot of upside ahead.
This is revenue from before that was even a thing.
Yep.
And certainly not revenue generated because of it, because those things aren't doing anything yet, right?
Yeah, absolutely. Let's see what else. They had guidance for the fourth quarter revenue, $855 million to $885. That is a little bit up sequentially, but fourth quarter is going to be a little bit lighter because it is colder, at least up here in the north. A little bit harder to install solar.
So I have a question for you. We saw gross margins peak at or close to 40% a few years ago, right? And they've come down. And I think you and I have largely agreed that this is basically a supplier kind of in between the customer and the manufacturer of the product that people are buying. And historically, these kind of businesses just don't get these kind of the margins that SolarEdge is getting.
And Enphase is in the same boat and similarly valued. Yep.
Yeah. So considering how much revenues grew. And yeah, we know there's cost pressure, right? We know all of those things that are driving inflation are there. But are you not a little bit surprised that they're not able to start getting some sort of operating leverage?
It's been surprising to me that everything else has been sort of crushed to a commodification level. And then this specific segment has remained both high growth and highly profitable.
Yeah.
And I just don't think that's going to continue forever. But that's been wrong, to be clear. For I thought that for 5 years, and that's been wrong. So I don't know. That's the way that I think about it. So I guess I'm not surprised to see margins come down, but I don't know if that's something that's going to sustain as well, just because of competition. What do you think, Jason?
Here's the slide that really compares that, right? That looks at this Q3, which is over here on the right, to Q3 2021 and last year. Right. And again, we've seen gross margins from 2 years ago. This was not even close to the peak. Right now, the overall profile has changed, partly because they're getting less gross margins and some of those other things. That's why they report a couple of slides up. Let me see right here. Gross margin for solar segment, 28.3. Right. Because that's more comparable to like this number back in 2021. So I think that's important. But again, look at operating income of roughly 10% operating margin compared to 12% operating margin a couple years ago. And my question and again, this is an instant reaction. So not having had time to really dig into the numbers and not sure how much of it they're going to fully disclose at the operating cost level, probably not really anything. How much of that erosion in operating margin is because of higher operating expenses in those newer businesses that they're trying to develop, where their operating margins might be low single digits or even negative at this point for some of those things. And they are getting operating leverage in the solar panels. Like it's defied gravity. I think that's about even though it's come down some, it's defied gravity. And that's why, as much as this is one, frankly, from when I bought this company like 6 or 7 years ago, I've sold off a part of it multiple times. And it has continued to be like a meaningful little part of my portfolio, even though my cost basis at this point is like 0.1%.
Yeah.
Because not only has the business defied gravity in terms of what we usually see of those companies that are in the middle and are just a supplier about like having pricing power and getting really good operating margin, but the fact that the stock has continued to defy gravity too. The reason that I do continue to hold is really because if they can continue to leverage the cash flow from that solar part of the business and build some meaningful other businesses in other areas that are complementary in what they do well, then it could continue to become a larger, more profitable business over time.
I'm going to pull up, I think what you're trying to point out here, and hopefully this chart will help people that are watching. This is SolarEdge's revenue. So I'll just isolate that here. Revenue growth has been incredible over the last decade. No questioning that. Net income growth starting to tail off here, but has been significantly growing since they were just coming out of net losses in, what was that, 2014, 15? Then their multiple has gone up as well.
Right.
This is what makes me nervous.
Investors have increasingly been willing to pay a higher premium for this business over time.
Yeah. And that's what makes me nervous, is that this is fundamentally a sort of commodity business. This is like electronics. Making electrical products is not a typically long-term, a high growth, high margin business. This is a commodity business where the GEs and the ABBs and the Siemens live, and those aren't companies that you pay a high price to sales multiple for. So that's what makes me nervous about this stock, and that continues to hold true today.
Yeah. I'll leave it at that.
But if that number keeps coming down, I get more and more interested every day.
Love the business, right? It's the valuation.
Absolutely. This has always been, the challenge has always been, is it too highly valued? So we will keep an eye on that.